Good morning, everyone. Welcome back. Today, I will analyze Block, formerly known as Square. For analyzing equities, I will use a 6-step valuation process which consists of the steps shown on the slide. Additionally, the DCF model used for the price target will be available to download in the description below. So what is Block? Block can be seen as an ecosystem play with two main ecosystems. The seller's ecosystem offers a cohesive commerce solution that helps sellers start, run, and grow their businesses by combining software, hardware, and financial services. The Cash App ecosystem offers financial products and services to help individuals manage their money. Cash App allows individuals to store, send, receive, spend, and invest their money. For the smaller ecosystem, Tidal is a global music and entertainment platform. TBD is an open developer platform to facilitate easier access to Bitcoin and other blockchain technologies, and Spiral is an independent team focused on contributing to Bitcoin's open source work. For industry analysis, it is important to understand the different dynamics of the different ecosystems. Some of the most notable competitors of Block are PayPal, SoFi, Intuit, Visa, and Stripe, which are payment solutions competing with the Cash App ecosystem. These equities are known for their high valuation, high growth, and medium profitability due to the high competition in the market and the low switching costs. Therefore, it is difficult for a traditional value investor to invest in these companies since the margin of safety on these stocks are thin, especially if a better service comes along. For competitive advantages, Block has the interaction inside the ecosystem and between the ecosystems, creating value to both buyers and sellers. Furthermore, Jack Dorsey recently stepped down as the Twitter CEO to fully focus on Block. He is a visionary leader and believes a lot in Bitcoin and its utilities, which can be used as a differentiating factor to the competitors. Additionally, as the crypto adoption continues, Block and its ecosystems will grow with it. Right now there is a bear market, so it's an hindrance to Block's valuation. However, when the next crypto bull market begins and the crypto revenue for Block picks up, the tables will turn again and it could lead to a multiple expansion as it happened last year. Finally, as the ecosystems get further developed and customers entrenched, switching costs can increase and that can lead to customer loyalty. Finally, as the ecosystems get further developed and customers entrenched, switching costs increase and that can lead to customer loyalty. Block's CEO is Jack Dorsey. He's an accomplished entrepreneur which co-founded Twitter in 2006 and now founded Square, now known as Block, in 2009. He has a unique personality and it can be seen through Square a lot of value creation for the shareholders. And as seen from the green rectangle, we can see the exuberance with the Cash App and the crypto boom. And now we can see how we went back to the long-term trend and now possibly preparing for the next bull run. The financial situation of Block is healthy. They have cash and cash equivalent of 5.8 billion with a total debt of 5.15 billion. They also have a quick ratio above 1, so there are low risk of insolvency, indicating a healthy balance sheet. There are three main risks present in Block. The first is the macroeconomic factors, specifically inflation and the recession, that will and are hitting the economy as a whole, and Block will be affected. Secondly, Block's valuation metrics are reliant on Bitcoin revenue as seen in 2021. So as long as the cryptocurrency markets stay bearish, it will be difficult for Block to sustain an up move. Thirdly, the competitive industries where Block is in require Block to rely heavily on their ecosystems. However, as seen from the growth in Square's GPV mix and the Cash App activities, they are trending in the right direction, with heavy growth. The price target for the Block's DCF model gives a price of $156 per share, and as a reminder, the DCF model that will be shown will be in the description below to download for free. This is my Block 5-year DCF model, and from the perpetuity approach I get a price target of 130, and from an EBITDA approach I get a price target of 181, and the average of these price targets will give an upside of 76% from the current price. To reach these values, I extrapolated the transaction-based revenue, subscription, hardware, and Bitcoin revenue up to 2027, and I did the same for cost of goods sold, depreciation and capital expenditures, and they will arrive at these values right here to 2027. These inputs using a 21% tax rate, a 10% discount rate, a 4% long-term growth rate will give the perpetuity approach value of 130, and with an EBITDA multiple of 16 times, I get the EBITDA price. In conclusion, Block's ecosystem is scaling, it is diversified, and it has a good financial position. Block has good management, however it has risks, especially during the crypto winter, the high inflation, and a recessionary environment. Therefore, check the risk and reward for you, but personally, Block at these levels is not a good buy, as long as the crypto winter and the bad macroeconomic environment remains. Therefore, currently, I would not add Block to a portfolio. But again, as a disclaimer, this is not financial advice, it is an analysis to give a new perspective for a specific equity. If you reached the end of the video, you're awesome. And if you enjoyed, please like and subscribe, as it will greatly help and support the channel. Have a good rest of your day, and I'll see you next time.